Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 17th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the overall markets with my market analysis. And I do the same thing for you guys in these daily market commentaries, but I'm layering on it some option strategies that I implement into my portfolio on a daily basis to increase that overall yield in my portfolio. What I'm trying to do for you guys, though, is to teach you guys or to show you guys these different option strategies and the nuances around them in order to implement them around any given assumption. So it's not just going out there and buying a call for a bullish assumption every single time. What we do is we look at the internals and check it out to make sure that we're turning the table on the probabilities into our favor. All right, so without further ado, let's get on with some of the economic data. One thing to talk about is yesterday we did have that two-day meeting. The result was 25 basis point cut, and the basically Powell coming out and saying that the target for GDP was going to be around 2%. Inflation right around there as well. And we're going to let inflation rise a little bit higher or a little bit stronger than what we normally would before we would see the FOMC start to raise interest rates. They want to make sure that they are meeting those inflation targets before they start raising interest rates. So that's something to keep an eye on, because that means that even though we might meet some of these inflation targets, that they're going to still hold off just a little bit to make sure we are out of the woods before they start raising some interest rates. Another thing to keep in mind, we've been talking about this stimulus package and how all of those things coming into effect would probably weaken the dollar, which we are starting to see some weaker dollar. But one of the things that we're seeing is these politicians are not necessarily aligned with the public's needs right now. The politicians' needs are that they need to get out there on the campaign trail, which is what they're desperate to do. But in the meantime, they need to get this stimulus package out there to the public. Well, that's a bit of a conundrum for these guys, because they're not necessarily aligned with what the public needs right now, and that's causing a little bit of pain in the markets today. On top of that, we got some economic data points that weren't so great. Philly Fed manufacturing came in line with expectations at 15. Now that's a good thing. We've been seeing these Philly Fed numbers come out pretty good. As a matter of fact, Empire State, remember, knocked it out of the park earlier on this week, coming in at, I think it was like 18 or something like that. So that was a nice number to see there. But now this one's coming in line with expectations. But on the flip side of that coin, we have some economic data points that didn't come out as well as expected, and that was in unemployment claims, coming in at 860,000, expected to be 825,000. Also a revision to last month's number higher from 884,000 to 894,000. So both of those unemployment claims, meaning people are looking for a job, despite the fact that we went into this pandemic at record lows, saw those unemployment numbers spike up to about 22 million. We've cut that in half to about 11 million, but now it's starting to seem that we're struggling to get the rest of those people employed again. Why? Because of the restaurant industry and the entertainment industry, I guess, if you will, where that is where the major hiring would be coming from, but we're not really seeing that. Worrying about, like I said, going into the winter, where these some of these locations, restaurants are only allowed to have people seated outside. Well, what do you do when it starts snowing? And that is an issue. So moving on, we got building permits, which is a bit surprising, coming in at 1,470,000, expected to be 1.5 million. So lower than expected there. Building permits doesn't really mean anything unless we, one of the expectations is they might have a log full of, or a folder full of permits. You can pull as many permits as you want. It doesn't necessarily mean you build on those. Well, we've been seeing them build on those. And so a bit disconcerting that we're seeing that pullback, and housing starts coming in lower than expected at 1,420,000, expected to be 1,470,000. So a little bit lower than expected on that front as well. Now that's a bit surprising as well, because we've been seeing the housing industry do very well here. And as a matter of fact, some of the things that we're also seeing is a lot of people, because they've been at home, have been doing things to improve that home, whether it's on soft treatments for the windows or new couches and things of that nature. The home office, which I've been talking about forever, those have been doing well, but it's a bit surprising. Housing starts is slowing down there, especially what we're seeing with this mass exit from the city into the suburbs, that those housing should start to crank up a little bit. And then natural gas storage is coming in at a build of 89 billion cubic feet. One thing we did this daily market commentary before we saw the drawdown in crude oil inventories from yesterday was negative 4,400,000, expected to be a build of 2,100,000. Some of that had to do with another hurricane hitting the Gulf, and that's going to shut down the offshore drilling. That's giving oil a little bit of strength yesterday and today. And as you can see, yesterday we peeled back into the 40 handle. Today, continuing that drive higher by about 87 cents and creating a nice volume node right here in and around that $41. So that is going to be probably where we see some time and volume being spent up between $45 and $40, and maybe see this paradigm shift down, which is what I would like to see. I would ultimately like to see some of these volume nodes and time and volume spent down at these levels to lower overall cost basis on gasoline and the manufacturing process, where we see polypropylene, some of those distillates go into. All right, gold is coming off by about $19. Again, yesterday seeing some strength based on the hope and dream that there was going to be a stimulus package, but today it's a little bit on shaky ground there, thin ice if you will, and we're seeing that show up in gold futures as they are coming off with the broader equities market as well. Bonds pushing higher just slightly. We did get back up into that area that I've been talking about, above 176.20, and that was short-lived yesterday after Powell was speaking. We actually ended up finishing near the lows of the day as equities were showing some strength. But today, markets are all over the place. People are really trying to figure out a direction here, and bonds are starting to show some weakness. Now, we do have the VIX moving higher, and that's because across the board we're seeing some weakness. Dow Jones off the lows nicely, but still in negative territory by 230 points. They are showing strength, while the NASDAQ isn't showing a whole lot of love to the investors, as that tech sector is really getting beat up today. And we'll show that right now with the NASDAQ being down 280 points on the day and down 2.5 percentage points off of the lows, one could say. But one thing to keep in mind is we have broken below that 50-day simple moving average, which is going to be concerning to a lot of people. Plus this 11,241 area has been breached and does not look like it's going to recover. So are we going to hold on to this little line in the sand, which is going to be a key, that we'll call it 11,000 mark, is going to be a key psychological level for the market to try and defend. Right now it is losing ground. I think we settled near the lows of the day, or we could even say below 11,000. It's going to show that we are going to look to retest some lower support levels there, and I think that that's looking like what it's going to happen here. E-mini S&P is just slightly above its 50-day moving average, and like I said, a move below, much below this level here, down almost 50 points on the day. That is going to again make the market want to retest this 3250 area, we could call it. 3242 is where the point of control is, and that is for the time spent. It's still a shows an acceptance of value. Now, I don't think that this Fibonacci or this Fibonacci lining up with the point of control is going to act as much of a support and resistance as much as a magnet, where it's going to want to be drawn down to that area and kind of get comfortable maybe for the next couple of weeks or so. So it does look like we are testing those 50-day simple moving averages, which are going to show that there is some weakness ahead here. It's a longer term weakness indicator, if you will. Let's look at the breakdown of the E-mini S&Ps. You can see heading into the late day, as soon as Powell started speaking, we started getting some weakness, and it was really continued on as the markets overseas started selling off. Our futures started selling off as well. Coming into today, we made a bit of an effort for a grind higher, but I think that the overarching theme here is the economic data was a little bit weak. It looks like these guys are going to head off onto the campaign trail and not get anything done for the stimulus, which is really going to hurt the small businessmen, these restaurants, the smaller restaurants. Those are the major drivers of employment, and especially heading into the winter, we need to really come up with a concise plan of action here. And if they start going out and campaigning, it's not going to get done, and that is going to hurt the overall economic expansion moving forward. So hopefully they can get something done. That will give equities a bit of a boost. It will also seriously help the overall economy, which is at a very fragile state at this point in time. So that needs to be done as far as I'm concerned. As for my portfolio, I haven't done anything as of today. I've got a couple of great ideas that I would like to implement, but I don't want to do that ahead of talking to you folks out there during those daily market commentaries. During these daily market commentaries, I usually talk about those trades, but I don't really like to implement a strategy that I'm going to be talking about in my webinars ahead of your guys' opportunity. So what I like to do is I'm going to break down a strategy I have found for one of these underlines I think could really benefit from the long iron condor, and I'm going to talk about all the nuances of that this afternoon. Tomorrow, I'm most likely going to implement that strategy, and hopefully I haven't missed a boat on it. One of them is going to be PENN. I want to implement a strategy around PENN, which I've got right here, but it's kind of broken out. I was expecting with yesterday's topping pattern there that this would be a great opportunity for that. I'm going to look at some other opportunities as well for you guys to implement, but something like this, when you start getting these big breakouts, that's the perfect time to implement a iron condor like I'm going to be talking about in the webinar today. So please go and check that out at protraderstrategies.com. That's all I've got for you guys. Hopefully you guys can all make it. I'm also doing a later one today with Steve Bigelow on his Candlestick Forum, where I'm going to be talking about streamlining your process, using some floor trader hacks that we used to use on the floor in order to discern strike location and several other things that we can talk about there. So please sign up for that. The more the merrier. Like I said, you guys drive the content. So if you have any questions whatsoever about options, you are free to ask me in those webinars. I'll answer them live for you there. All right. So other than that, take a moment to go over our disclaimer. We're an educational company. I'm not trying to solicit you guys to jump on board with my trades, but what I'm trying to do is to let you guys know or show you guys how to implement strategies, option strategies, where you don't have the pain points that I used to have to do on the floor, where we have to implement a strategy at the wrong time. And that's one of the benefits of trading online, is that you don't have to be stuck with a trade you didn't really want. Whereas on the floor, that's what we had to do. So I've learned from that, and I'm trying to convey that knowledge to you in these webinars. All right, so check that out. And if you can't take that, take it easy.